is video.
Okay, so let's take a look at how these events have played out. So we went over a little bit this morning. We were looking to see if the bears could keep this going. And right off the open, of course, the bears got a zero test. The daily, it popped up and was able to give them a test right here at the open. You could see the bears were very interested in that. And in doing so, we're able to even get some bulls to step aside with liquidity, liquidating anybody who picked that up. But it put them into a decay retest where they had the retest, the volume, and the new highs coming in to complete the decay retest. Now that retest worked out very well, leaned the market back up. The bears resampled here. They got another zero test right there and did absolutely nothing. Then decay pushes up, samples the bears right here, who fail to have any action or reaction to getting liquidity at all. And they get turned upside down. And so I've marked that out. And throughout the afternoon, what the market was trying to do was liquidate that position, which finally happened here. It's sort of hard to see right now. I'll zoom in a little bit. I don't usually like to do this, but you can see that it just accelerated a little bit there. In real time, it was a little easier to see, but it's hard to see there. But it accelerated right there as the market swept up, and a lot of these bears who were right here liquidated right there. Now, the next thing that happened is important to understand how this whole structure works. Once you've liquidated the loser, the counterparty, which is these guys, who's going to pay for the next move up? And so right about here, I started looking at what needs to happen. And the first thing that we need to get, because this was not great liquidity. Yes?
Do it quiet.
I'll do my best. Okay. He wants me to do it quietly, so I'll whisper. The next thing that needs to happen is this needs to lean down, and I think sampling the bulls is the thing to watch for. You could see velocity has been moving down towards zero. Turn this up a little. Down towards zero all afternoon. I mean, you don't need an indicator to mark that. That is just clear. It's been moving towards zero all afternoon. And at this rate, we're going to get zero right into the close. And there's not going to be any time to really take advantage of this if this doesn't work out correctly.
To do this quiet.
I'm not sure how much quieter I can be so that they can hear me. Maybe you could go into hang out with Max until I'm done.
Do this.
That quiet?
Mm-hmm.
That's very quiet.
How about this?
Can we do like this loud?
No. You have to do it like that. Slowly.
Slowly, slowly, slowly. So, I feel like I'm going to get in trouble if I talk too loud. So what the market's trying to do is get a sample off of zero here. That's what we're looking to do. We want to sample the bulls. We took out the bears right here. And so now the question is, well, how are we going to pump this further? Look at how much range we got out of this. And now it's just moving up. Likely it's just a result of momentum. We're at negative 35. We'll probably close about negative 38% maybe or so. And then the next question is, what are the bulls going to do? 30 in the 30s? We could go all the way to 60s tomorrow. I mean, there's no reason for this to come back. There's no reason. I just got in trouble. There's no reason for this not to continue. It doesn't have to come back down. The question is, yes?
You have to do like this quiet.
That's a little too quiet. Could you go sit in the other room and then I'll come get you once I'm done?
I want you to do it this loud. You have to do this.
Okay,
This
I'll try to be quiet while I finish here.
Whisper this.
Whisper that. That's very quiet.
Yeah.
Okay.
Do it very quiet.
Okay. Slower. Yeah. Okay, so we need to sample the bulls and see what the bulls have got. Are the bulls going to hit? Are they going to pick up liquidity and shoot this up? Are the bulls going to step aside and basically just take the victory? Are they going to defend daily tension? You can see that this is just right on the edge, and we had a pretty close zero test on daily tension right here into this low. It provided a little bit of an opportunity to get into the market. But the real question isn't what are the opportunities to buy into the market. We got the structure. We took out the bears. Yes?
Do it.
I met my maximum minimum. I can't get any quieter, otherwise I'm not talking.
Everybody can hear you quieter. They can hear
Can you guys hear me quieter? Okay, I'll try to be quieter. The question is, we got our structure. We got a difficult bullish position to push out the controlling party, which was here, and they liquidated, and they lost control of both daily and 30-minute. So the bulls did an excellent job of taking out the bears and establishing control. But now we need to see if the bulls can wrangle structure. We have to see bulls come in, trap some bears, and run them to pump the market higher. It could take some time. Trapping in bears means getting velocity down and sampling from below, or decay down and sampling from below. This could, yes?
Say volcano.
Volcano.
No. Let's go pee-pee first.
I don't have to go to the bathroom. Do you need to go potty? You can go. Okay. I'm going to turn on the light for him just a second. Okay. I take the time to take him to the bathroom because I know one day he's not going to ask. So, okay, so what's going to happen now is we need to figure out the structure here. It was good to see that the bulls defended daily tension and gave us a low. It's really good. I'm glad about that. It shows us some of the intention of the bulls. But what we really need to see is the bulls trap some bears and run them out to pump tension. I don't think we're going to be seeing anything like that until tomorrow, but that's the next event to see happen. So overall, what we really need more than a bullish test, like a zero test, is a bearish test. If we could see the bears do nothing again, I think the bulls could then assert themselves a little bit more in a more structured way. I think right now, the best trade for the day was somewhere around in this area. For me, it took me, I think I was being a little slow this morning till about here. I would call this the number one trade. It was rough. You had to really know your stuff to be able to participate in this market this morning. Past that, I think the second trade could have potentially been in here, recognizing the liquidation, how that accelerated, which is hard to see now, but you could see it in real time pretty clearly. Recognizing the acceleration and the need to lean down and sample some of the bulls again. I think this could potentially be number two, but I'm going to put a question mark next to it because it was really unstructured and you had to be pretty intuitive to try to do anything with that. And it was a scalp at best. Otherwise, I think this was an okay spot to get in. I'll put it as maybe 3, maybe I'll put this as 2 because we had a bullish zero test on tension. After all that structural stuff, we saw them break down the bears. We saw them get control tension. So seeing a zero test right here, I think was a pretty good call. A little bit better maybe than this one. Maybe we'll call this one 3 and this one 2. The thing that I'm waiting for next. So what am I looking for? I want to see a little bit more structure from the bulls. We saw the destruction of tension. We saw the destruction of the structure from the bulls, but the structure by the bulls is a little bit weak. I would have liked to see some nice clean liquidity down here. The trap was good. It was just that we're running this with a root position. So our root position here, the first one in the whole thing, is a decay retest. And decay retest positions like this one's really tough. And if you guys know how this system works, we could be looking at open interest theft in that this liquidity, because decay moved down, gave us liquidity. That's negative decay plus the trapped orders. You could view this as it was liquidity, and then they got stopped out, and you can see that because tension curled down. And you could say that was open interest theft. You can. But this was really difficult because you needed to be right on top of that. You need to know exactly what was going on. You need to interpret all these things in real time and track a decay retest. Liquidity that got liquidated, that means open interest theft liquidity, tracking how decay. So it was a lot of things to track, and that's why I think that the complexity on this one was medium to high, if not just high, because you had to track all these events and recognize the structure and everything that was going on. It was a lot to take in, and I think if you're not really familiar with the system, then it was a lot of data points to straighten out at the same time, and that's why I think it was difficult. If you're really familiar with this trading strategy, you may have looked at this low and said, oh, this is making sense, and I see what's going on. It has a lot to do with how familiar you are. How well do you recognize a decay retest in real time when you're stressed? How well do you pick up on liquidity in real time? How well do you interpret that as a liquidation and then the completion of a decay retest? How well do you see these things in real time? Because one of the things you'll give into that's really hard is that you'll start nuance analysis, which is really annoying. Nuance analysis for me is where that people pick out these little nuances like, well, it ticked up instead of down. And you get very nuanced and you come up with these broad explanations based on a little tiny single data point. And nuance analysis usually is just a rabbit hole that eats you for breakfast. You want to try and stay back from that. Don't let yourself get into, for example, if you're watching this and you see a little kink in this right here, and you say, oh, it's starting to tick down. Oh, but it's ticking up. Oh, so it stopped people out. I'll bet it stopped people out. And therefore, this could potentially be stops. I'll bet it's going to run down. And okay, but it moved up while it was running down. That's totally bullish. And you look at that and you think that you're making sense out of it. But what you're doing is you're taking your view and you're going like this. And you're saying, I've put a lot of thought into this. This is what you're doing. You're saying, I'm willing to pay hyper focus, and you're equating that with higher opportunity guarantee. You're saying I'm willing to pay this high focus because paying attention is a payment, and psychologically we treat that as money. So you say, I'm going to pay a lot of attention and hope to extract an increasing guarantee for my opportunities. And what you're actually doing is you're increasing the amount of data points that you're willing to acknowledge. And you need to be comfortable with no data points for a while. So for instance, this lean down was a little boring because there wasn't really anything in this area here for me to assess. As it moved down, we saw the daily tension get down to zero. There were no samples, nothing was really going on there. So for me, this section right here was just an absence of data points. So don't let yourself get into nuanced analysis. Make sure they're big enough data points. Yes.
Yeah, can you hold this for me?
I got it.
Say minion.
Minion. Here you go. Let me finish up what I'm doing and I'll come play with you, okay?
What?
So your data points need to be big enough that they don't fall apart with just a little move up or down. Yes?
You have to they can be quieter.
I have to be quieter, guys. So that's a little warning. I just wanted to give you. If you're getting too nuanced with your data points, you're upping your data points. And what happens is that they become more fragile. you see a little move here and it moves down a little bit and your whole world can fall apart. You have to step back because you want your analysis sturdy enough that a little move here and a little move there doesn't break you down. The goal here at the very end would be a piece of analysis that you can pick up maybe here. And you could tolerate all this because you know what's going on. It's rigid enough to deal with this kind of stuff such that you could predict a movement because your analysis is actually that rigid. It doesn't mean that you're making predictions that you're going to treat that rigid. It's because your analysis is that rigid. And that's a fine line. It shouldn't be, but it's one that you're smart enough that you will narrow down to a very fine line because human beings are really smart. So you need to make sure your analysis is founded in something that can't just fall apart in a few seconds. And a good question is if price moves down through this analysis to the other side, how rigid is it? And a lot of times you'll say, wow, if it moved down just a couple of points, my whole thesis is in the garbage. And that's not a good thesis. A lot of times the strength of your analysis has to do with how easy it is to break. Would a big, huge move down kill it? I mean, most analysis, a 50-point move is going to just break you. And it should. If you hold through a 50-point sweep and you're like, it's coming back up, that's just not good. Like, you do have to have a limit, but the point is what's it going to take to break down your thought process? And I really stray away from little tiny things. Don't get into little, oh, it ticked up, ticked down, it was a little this, little, don't do that. My analysis tends to trail, so I'm usually considering at least a half a day before, and then everything throughout the day matters to me. So this whole section matters to me. So it's all day here, and at least half a day of the day before. So that's important. All that data in there is going to it changes my decision making. I sometimes will consider 2 or 3 days. It just really depends on what's going on. And I think that you have to work on that. It's a skill that you have to learn, to step back and say, how good are these data points? How easy are they to break? What's likely to happen? What does it mean? So that when you take action, you know that action isn't just going to be broken down by one bar or one scary signal. Just something to keep in mind. So as we move down here in this, what I call a lean, so this is a lean down, I want to see the bulls get sampled. I think this response right here had to do with trying to defend daily tension, but I think it was premature. I think that they should have, we didn't get liquidity here. We didn't get liquidity here. It was early. And I can understand that there's some enthusiasm here by the bulls to come in, but early trading can sabotage your team. So if these bulls aren't careful, their defensive daily tension can turn into the destruction of being able to get liquidity and things. Not that it will, just eager traders can cause problems for everyone. I think we've seen that a couple of times. Anyway, so right now we have 15 minutes left. And I think we could get a sample here, move down. And I think this sample is going to be important because this is the first liquidity sample after the bulls really get themselves established. So here's the question. Do you anticipate teeth? So this is going to be a hard question to answer today. Usually it's pretty straightforward and I can tell you yes or no easily. Now let me tell you why I think today is going to have some gray area when it comes to teeth. Because this morning, the way it's set up was tough. If you don't want to consider that this was a genuine liquidity position based on open interest theft, maybe you say, hey, I don't think that works. I think it was pretty good. It was a really tough call. That ambiguity is the difference between teeth and no teeth. Because if there's a liquidity position here, one the market was actually genuinely able to use, then there's going to be teeth. If you think it was just a decay retest, risk reduction, something to just cut down on risk to get your foot in the door and see what you can do, then I'm not sure that there's going to be teeth, because teeth is the result of having a root liquidity position and then being able to sort of willy-nilly add on to it it's okay. You have some wiggle room. And that's what causes the teeth. So in this instance, was there liquidity in the root position? I think you could make an argument for yes. The problem is that it's not solid. It's... So I'm going to assume that the teeth is also... I don't really want to see teeth at this point. If this is going to work out the way I think it could, with a bunch of bears trapped in this area here, people chasing into that, trying to catch onto that, I don't think we should see teeth. We shouldn't see this like give us a bullish sample and then dip down and then come up. I would be like, come on, you're going to let those guys out? So I don't want to see teeth. What I want to see is a bullish sample that just takes off. I want to say, okay, I saw the setup. The low was really tough. Okay, but this second sample, I want to see it go because I want to see a regular big pile of liquidity that I can just go and call that the root position, or at least as close to it as I can. If we see some teeth here, I'm going to be like, well, that gives me doubts about this. I mean, if we see liquidity and then it fails, I'm going to be like, well, are we coming back here to sample the lows? It could just, in my head, teeth would cause problems right now, so I'm not looking for them. Okay, so that's what I'm anticipating. We get a liquidity sample. The bulls come in and pick it up. And then tomorrow we need to look at trapping in some bears and seeing what kind of damage these bulls can really do. All right, so we've covered the basic structure with an expectation. Now I want to point something out. It was something somebody asked today, and I think it's important because I think we're having a situation that's looking like that. Question was, what's a AAA setup? Because really the question was, how do you know when the market's turning? And my response, and this is what I think, is that when you see the controlling party, so in this case, the bears, but really any party, but we're going to look at the bears. When the bears have a AAA setup and they fail, so the bears fail that and the bulls just come in and pick it up, you know that sentiment is changing. Same thing here. And so I think the bears had some good things. They absolutely had right here, right into the close here, some daily zero tests. They were able to pump it down, and then today they just totally got obliterated. The thing is that the bears didn't necessarily fail. They didn't just do nothing about them. They did do quite a bit, but today they just got obliterated. So I don't see this as the bears getting a AAA setup. And here's the kicker. Are you ready? I see this as the bulls getting a AAA setup. Because the bulls were able to take out both 30 and daily. The bulls were able to wipe out this here. They have trapped in a bunch of people. If you've been following, this looks like a AAA setup for the bulls. They have everything they need to pump this higher tomorrow. And I want you to consider what this means. And we haven't had this yet. If the bulls fail to capitalize on this and the bears come in, that is a huge sentiment change. It's one thing to take out for the bears to take out a bullish position and run them out and, oh, we got you to unwind and stuff. It's a whole nother okay, just a second, I'll be in there. It's a whole nother thing for the bulls to have a perfect setup and do nothing. It's that they fail. Okay, I'll be right back. I got to take care of Pierce in the bathroom. Okay, so going into the close today, I want you to keep in mind the bulls have an excellent setup. Okay, here we go. So we're getting the test right here. You see decays coming under. The thing that I really want to see is velocity. This is the one I've been watching all day. And you can see that it has kind of given us this precedent. That's like, this is what's happening. So here comes our test. Now remember, if the bulls do nothing and the bears come in and just, I mean, if the bulls do nothing here and just bearishness shows up, I'm going to take that as a strong change in overall sentiment. The bulls have everything they need. This is a great setup. They should take this by all means. I just want to say this is a AAA setup. And if the bulls don't show up, remember, that's a trend behavior, major trend, weeks kind of thing, or at least a long distance. If the bears just show up and take them out, that's a really big problem. The bulls should pick this up. They have all the structure. They've gotten, events to happen. So if we see this come down and then tomorrow tension opens here and just moves down, I'm going to be like, the entire market just switched to a bearish trending kind of thing. The sentiment just got crushed. It's different than structure. For me, structure is where that one party can... Yes? Okay, sorry, I was a little too loud. Structure is where the one party can trap another in and use them to pump tension in their favor and control probabilities. The overall trend or the sentiment has to do with whether your opponent can do it or not. And this is one of those instances where that there's a lot of weight on the sentiment here, more than the structure. Because we've seen the bulls have taken over the structure. We've seen them dominate. We've seen them take tension over. But what if they don't do anything about that? I mean, think about that. If somebody said, here's $1 million, all you got to do is take it, and you walk away, your opponent wins. I mean, that's what this looks like to me. So I just want to make that clear. I'm not saying it's going to fail. I just want you to understand the gravity of failing to pick up a AAA setup, something that's got all the bells and whistles, got all the things you need to really take over the market, and it looks great, and then you do nothing, is like, whoa. And part of that philosophy, I mean, you can think of it that way. I prefer to think of it that way because I like narrative. I love stories and stuff, and for me, this fits. But really, you should think of it as there is really only one institution here. This is an institution. There's only one. And if they're bearish, they're not bullish. So why would they pick up a AAA setup? They're going to just sell everybody out of that AAA setup because statistically, people will jump in, and so they just get to liquidate them. So there's really only one institution. There's not like a myriad of different opinions. They're really all the same opinion. So you could think of it that way if it helps. Personally, I like to think of it this way because it helps keep me engaged and up with the narrative, and I can use my emotions to analyze this and get much better results than something cold, just too cold. Like for me, I think if these guys don't show up, that's the issue. And that helps me keep up with this and on the ball. If you just think, well, there's one player, you start running into the conspiracy. And the problem with conspiracy isn't that there isn't conspiracy. There is. There just is. People conspire to make money. That's fine. It happens. The problem is that conspiracy leads to, it's a conspiracy leads to paranoia. And paranoia leads to nuance analysis. And that's where you run into problems. You start saying, oh, well, they're totally bearish. They're not bullish. And then you analyze yourself into a bad position. And that's where you run into trouble. That's where I always would run into trouble. So I stopped looking at it as one institution, though I knew it was, and looked at it as two and tracked the narrative because it keeps me away from that conspiracy that sort of drives you down the rabbit hole that can screw you up. This is a big fat game. It's a big fat head game. The whole thing. Everything about this. It's a game where that people consume liquidity, try to conceal their hands, and at some point there is an inevitable outcome. There's always one. There's always a moment when one side made a mistake or didn't work, and the other side is like, you're going to pay for that. It's a game, and it's hard to have real money on the table and maintain a mentality of a game. Those two things are really hard to make compatible. But your ability to treat it like a game is going to have to do with your experience. if you're familiar with it, you know how it works, and you get the narrative, and you know how stories work, and it all pieced together, then you're going to be able to treat it like, okay, so we're seeing the bulls hit here, which I'm a little surprised. We got our dip right there. They're coming in. We got up to 33 from 30, so we got our sweep up. This is the hit. The next part is to look for the impact, and we have a couple minutes. We might be able to see the swing up into the close. They didn't get velocity, so that's okay. The liquidity is still legitimate. Now, how would we liquidate this liquidity? I think that we would have to push under this root position here for the bears, those that are trapped, some liquidated here. I think we probably have to push down to here. That's what I'm looking for. I mean, you can see that, right? Decay pushed under 0. I pointed that out. Our trapped orders are green. They finished up. Bulls are hitting this off. If we can get that to run, then we can say, all right, okay, bulls are here into the close. And then on Monday, I'm so used to, tomorrow, we're going to need to see bears get stuck in and see if we can trap them in. And I think there's no problem with running this even higher, closing up here at like negative 60%. No problem with that. Okay, so don't get it in your head that just because it's up, it has to come down. It can, but as long as we don't see events or behaviors that lead you to believe that's the intention, then you continue to play as though you know what they're doing. And that's how we're going to roll with this. So we're seeing these guys come in. We didn't get our little velocity sample. There's probably not enough time to hit that. I mean, we could if this just all of a sudden dropped out the floor, but I don't think there's enough time. I think the objective now is to probably get this up. And I think the idea in the morning, right here at the open, this is just, okay, let me just make this clear. This is me moving into hunch mode experience. So if you want to convince a bunch of people to sell into the market, the easiest way to do that is to use a qualifier. IER. And the qualifier that bears love the most is chaos, of course. We're gonna use the one that says high. And this is interesting because if you've ever tried to write an algorithm that defines what high is, you run into a problem. You have no idea what that is. There's no reason to call it. There's never a price that's too high to buy. That's silly. That's just silly. High is a made up thing. It can always go up further. So, and the same with futures for the most part, low, except for with oil. Remember when oil went negative a while ago? I was like, I'm gonna call this low. I'm gonna say this is a mechanical low and there is no way out of it. So I want people to say high. So look at this market and say, what would be high to you? And I think high would be here. I mean, right about there, right? We just draw that over, I don't know, about 306. So if we open the market right here and do something like that, oh man, you know a bunch of people are going to sell that. 1, for the gap, 2, because it's a high price, they're going to bring it down. So it makes sense to me to gap this up to try and get those bears in, trap them in. Maybe we get another liquidity sample or something like that, maybe here or here. And then we run that out and get us up to the 307 and beyond. For me, that makes total sense. We get bulls right here into the close, pop it up, trap those bears in. The easiest way is to say, hey, these prices are high. And the only way that most people determine high has nothing to do with demand or supply, even though their indicator calls it overbought, oversold, supply, demand. What they're doing is they're saying this price compared to some past event. And a lot of people will just look at this and say, oh yeah, well look at that sharp move. That's really sharp. You get us up here, they're gonna say, hey, that's high, and try and sell that down. So I think an open a little higher tomorrow could help us with that bearish thing. So when am I gonna act? Okay, so we've covered, I know I sort of ramble. There's just a lot of things to say about this and we're running out of time. The first thing, I want to make clear, okay, this is a AAA setup for the bulls. Okay, I want to make that clear. So if this pops down tomorrow, the bulls fail and it tanks, that's a huge sentiment like up to a week. I would expect the market to be dealing with that sentiment shift. But it is a AAA setup, so I don't want you to think that, oh, all AAA setups fail. No. You could see the response we're getting here out of the market. It's because of the AAA nature of this trade. So the bulls can see what this is, and that's, in my experience, that's what this is. It's not, I don't know who's trying to take credit for this, but this is the response of the bulls seeing a piece of liquidity show up after they've defended daily tension and taken out the bears. This is like, this does not surprise me. So one, this is a AAA bull setup. I just want to make that really clear so you understand that going into tomorrow. Two, in order to run a trend, you need to pump tension. How do you pump tension? You liquidate the counterparty. That's what you do. You take them out. You trap them in and you try and get them to move their stop up, which is I don't even know if I would call it a finesse or even a difficult process. It's pretty standard what they're going to do to try and do that. Once we get someone stuck in, I'll go over the steps of getting somebody to move their stop, how you convince the opponent to move their stop. We can go over that tomorrow, but this is the objective. We are in this step right now. I want to see these bulls effectively run some bears, and I'll say, okay, the bulls are here. And I never really believed in this downside anyway. If you remember, the way that this downside built was the bulls not really showing up in the morning and the bears coming in. This is the second time they've done it. They were able to bring it down twice. So this is where we are. So we want to trap bears tomorrow. That's my big focus right now. So if you're like, what's the thing you're looking for next? That's the thing I'm looking for next. And I think a gap up makes sense because it will tell the bears the prices are high. Then we'll get some liquidity. They'll sell it. It won't quite work. We can trap them in off the open and we can run a squeeze or whatever you want to call it, a bleed. I don't know. For me, it's an inversion. So that's what I'm looking for tomorrow morning. Now let's look at some charts we don't usually look at. This one, I wanted to point this out so you can see it. This isn't one of the main charts. I do look at it since, like, you can't see it, but right here next to my head, I can see that chart all day because it's literally on that computer. So I do look at it probably 30, 40 times a day. I glance up to make sure. So you could see that we had positive divergence here, which I don't like to think of it as positive divergence. What I like to think of it, are you ready? This is how I define it. You see how far down that moved versus this move? And you see that it didn't even come close to getting down there while this pushed a new low. I call this unrepresented. The price move was unrepresented. It works both ways. If we get a huge shot up and this shot doesn't seem to represent that, it can help cap the move. Moves need to be represented in the stat ADI. It's a big problem. You can see that. Let's see if we can. So right here, this actually wasn't too bad. It was just straight up a reversal. You can see move up. Oh, it's reloading. Does this every 5? So I look for representation. Did that move, was it represented on the stat ADI? And if it wasn't, you could say this move is struggling to get represented and it's creating some sort of a positive divergence. The reason I think of it that way is because it tends to translate better if you say those words instead of positive or negative divergence. Because you might say things like, well, but it's not very high. It's only like 900 and it could go to 3,000. It's like, yeah, that's true. But the question is, was it represented? I mean, you can see that this move down and this move down just was underrepresented. And it's not something that I jump in on a hair. Like, I'm not going to be like, boom. But I do take note of that all the time. And basically, positive divergence is where the downward priceward moves are being underrepresented in the stat ADI. They're not aggressive enough to represent what's happening. The big problem with positive divergence, you ready? I'm going to tell you the truth. No matter the indicator, no matter the tool, divergences can diverge for eternity. And there's a breaking point where a divergence, a positive divergence, there's a point where a positive divergence, if price goes too far, becomes a ceiling. The point where that becomes a ceiling is the pain tolerance. If everybody breaks, they cover their position, price closes the spread. The spread is the distance between where you covered and your entry position, which is usually right around where the thing started. And then it becomes a problem and it creates a ceiling, creates a downward force. And the reason for that is because the move back up was not created by demand, it was created by a vacuum. People dumped and then it filled the vacuum, and then it usually will come back down a little bit, and then the market has to choose. So there's a point where a positive or negative divergence breaks. It's the pain tolerance. So I don't look at these unless I have some precedence. So this one, today when the market opened, I had much more precedent, much more. All night it had been moving up pretty aggressively. I mean, you could see this pretty aggressive. And it dipped down. It was under, I mean, you could see that, right? It's underrepresented. It moved all the way down and it just, nothing. So once you see the context and you're like, oh my gosh, this is like doing this thing, you can use this to help you determine which moves are opportunities and which ones aren't. And it looks like positive and negative divergence, but really it's based on what's going on. Okay, so I wanted to talk about that for a second, but you can see that this was rising and it's helping show you what's going on in the market. And twice we've seen this. Okay, so that was that. You can also see that our best fit vector lines, which in my opinion, these are some of the best long-term trend definitions that are easy to see. Just what color it's plotting, not this, not what color that is. That's the color of the, so it's moving up, so it's coloring it green. But you can see it came down, and it got right down to the predicted trend line. These are predicted on the 1st of the month. These are not calculated over and over and over. They calculate once. There's a set for bearish trend lines, and there's a set for bullish trend lines. When it's green, it plots the upward trend line prediction. When it's red, it plots the bearish trend line prediction. Got that? So right here, it tested the lower trend line. And this is frequent. So I would have removed them if it wasn't useful. In context, it's useful. So I just wanted to show you these two charts. These are on the live charts. You can get both of them, and then tension and the VolTWAP, which probably most of you are already familiar with. So that's that. And those are some of the things going on. So you could see that there's a lot of precedence here for the bulls to come in. It's a AAA setup. Don't get that wrong. Just remember what it means if tomorrow we gap down. I want you to make sure that everyone who can hear me understands that if we gap down tomorrow, daily tension is under 0 and 30-minute is headed down. If we see this configuration tomorrow, this is trouble, because it means that the bulls are screwing up a great trade that could have gone for 1 or 2 days, maybe a week, that would have looked great. So I just want you to understand that so that you're ready and you don't need me to pop in and say, hey, you guys, this is an issue. You need to just know that already. I don't anticipate that, just in case you guys are ready for that. I think we should open a little bit higher would be great. Flat would also work, but I think higher would be perfect. Right up near this right here. So let's see, Fridays, right near Friday's open area. Give us a little setup, move down, trap those guys in, and we take off. But one last thing I want to show you, because I sort of forgot about it, because it happened this morning, and then we've been inverted all day. Well, not all day. After it pushed up, you could see that it got over the inversion line. Turn my pen over the inversion line, leaned back for somewhat of a test, and moved up. And it's just been inverted ever since. The end of this inversion, I think if tomorrow this popped up and we got above 1306, that it would clear the inversion out and then need to reset up, which means another break up and another retest to see if it's going to hold. So we could see this open higher, we get another inversion line, it breaks above, retests a little bit, and then further squeezes. So I just want to show you that, and my expectations could happen tomorrow morning with those there. So that's where we're at. I think the market has great bullish potential right now, but it's going to depend on if the bulls can trap the bears and pump tension further. That's a big deal right now. Okay, I hope this is useful. I hope you guys were able to take advantage of some of the opportunities today. I'll see you guys tomorrow.